Hello everyone and welcome to Geopolitical Trends, where truth matters. Well. Looks like Burkina Faso and other Sahel region countries are telling the imperialist West to go get lost forever. In a bold move that has captured the attention of the global mining industry and financial markets alike, Burkina Faso has announced the nationalization of two significant gold mines, Bonio and Wahnion. These two mines were previously owned by London-listed Endeavour Mining, which had agreed to sell them to Lilium Mining for over $300 million. However, the West African state has now struck a deal to take ownership of these assets for a mere $80 million, with an additional 3% royalty on up to 400,000 ounces of gold from Wahnion, a provision estimated to be worth around $20 million. This strategic maneuver by Burkina Faso marks a significant shift in the country's approach to its natural resources and raises important questions about its impact on the global gold market. So what is the strategic nationalization meaning in the long term? Well, let's take a deeper look into this. The nationalization of natural resources is not a new concept in global geopolitics. Countries have historically moved to take control of their key industries, especially those related to energy and minerals, in pursuit of economic sovereignty, greater control over revenues, and the protection of national interests. Burkina Faso's decision to nationalize these gold mines follows a similar trajectory. Also reflects a broader trend of resource nationalism that has been gaining momentum across Africa in recent years. The mines in question, Bonio and Wahnion, are among the most productive in the country. For example, Bonio alone has been a cornerstone of Burkina Faso's gold production, contributing significantly to the nation's GDP. By nationalizing these assets, the Burkinabe government aims to ensure that a larger share of the profit generated by these resources stays within the country, contributing to national GDP. Then what about the immediate implications on the global gold market? The nationalization of these two gold mines by Burkina Faso will inevitably have ripple effects across the global gold market. The first and most immediate impact is likely to be on the global gold prices. Gold, often seen as a safe haven during times of economic uncertainty, is highly sensitive to changes in supply dynamics. The sudden shift in ownership and control of two major mines introduces a new layer of unpredictability in the market. Historically, nationalization often leads to concerns about the continuity of operations, efficiency, and the potential for reduced output. If Burkina Faso struggles to maintain the production level previously achieved under private ownership, global gold supply could tighten, leading to an upward pressure on prices. Investors already wary of geopolitical risks may react by driving gold prices higher as they seek to hedge against potential supply disruption. What about the long-term consequences and strategic shift? While the immediate impact on global gold prices is a key consideration, the long-term consequences of Burkina Faso's nationalization strategy could be even more profound. In the longer term, if Burkina Faso successfully manages these assets and maintains or even increases production levels, it could set precedent for other African nations. The message will be clear. Countries can retain control of their natural resources and still operate them effectively without the need for heavy reliance on foreign multinationals. Furthermore, the global gold market could see a shift in its traditional supply dynamics. African nations collectively hold vast gold reserves, and any significant change in their approach to resource management could reshape global supply chains. If nationalization efforts lead to a more localized control of production and distribution, global trade patterns for gold could shift, with African countries potentially playing a more dominant role in the market. Then what about the global economic and geopolitical implications? Well, the nationalization of these gold mines also carries significant geopolitical implications. Gold is not just some commodity, it is also a strategic asset that plays a critical role in global finance and trade. Countries with significant gold reserves hold considerable economic power, and any shifts in the control of gold production can have wide-reaching effect on global economic stability. For Burkina Faso, taking control of its gold mines is a statement of economic independence and a bid to strengthen its position on the global stage. The country's ability to leverage its gold reserves could enhance its negotiating power in international forums, particularly within organizations like the African Union and other regional bodies. On the global stage, other major gold-producing countries will be watching closely. If Burkina Faso's nationalization proves successful, it could inspire similar actions elsewhere, potentially leading to a re-evaluation of global gold reserves and their ownership. This could have implications for global trade balances, currency stability, and even international relations, as countries seek to secure their access to gold. Here is my conclusion for you. A new era of gold markets. The nationalization of the Bonio and Wahnion gold mines by Burkina Faso marks a significant moment in the global gold market. While the immediate impact on gold prices are likely to be driven by concerns over supply disruptions and geopolitical risks, the long-term consequences could be far more transformative. This move by Burkina Faso could signal the beginning of a new era in which African nations take greater control over their natural resources, challenging the dominance of foreign multinationals in the mining industry. If successful, it could lead to reconfiguration of global gold supply chain and a shift in the balance of power within the global economy.
Recently, we've been closely following our show's sponsor for today, DeFi Technologies, US stock ticker DEFTF. And it's clear to me that they're becoming a significant player in the cryptocurrency industry. This company is a reflection of the broader trend of decentralization, something, number one, I'm a big fan of, and that I believe is going to shape the next decade. I want to share with you some key insights I've gathered from recent developments and financial reports, which paint a vivid picture of where DeFi Technologies is headed. First of all, I want to talk about Donald Trump and his promise of decentralization. Very interesting.
Hello, Bitcoiners. Thank you very much. Hello, it's good to be with you.
So let me start with something that caught my attention recently. Donald Trump's speech on the cryptocurrency industry. This highlights just how important cryptocurrency is becoming in national policy. It was a powerful and interesting address, and it might even be a blueprint for the future. Trump's words really struck a chord with many people, especially his emphasis on how the United States should lead in the crypto space by embracing decentralized finance, or DeFi. He praised the talent within the industry, likening crypto visionaries to historical figures like the steel magnates of the past, and highlighted the rapid rise of Bitcoin as the 9th largest asset class globally. What stood out to me the most was Trump's commitment to making cryptocurrency a central component of Americans' economic strategy. He envisions the US excelling in the crypto space, focusing on leadership and innovation. He even mentioned that under his administration, he wanted Bitcoin to be mined, minted, and made in America, something he called a common sense approach to governance. Another bold idea he presented was the adoption of stablecoins, which could revolutionize global finance by allowing people in unstable economies to peg their savings to the US dollar through cryptocurrency. This might be a strategic move to enhance the global importance of the dollar. Trump also disclosed, and this was very interesting to me, that the US government actually owns 210,000 Bitcoin, which will be used as a seed for a strategic core stockpile. Now, shifting to DeFi technologies, US stock ticker DEFTF. We've been really impressed with their financial performance. In Q2 of 2024, they reported record-breaking earnings, with revenues hitting $98 million for the quarter and a net income of $66.5 million. These numbers show just how well DeFi Technologies is capitalizing on the growing DeFi market. The main driver of this success is Valour Asset Management, a 100% owned subsidiary of DeFi Technologies. Valour provides exchange-traded products, or ETPs, for the cryptocurrency industry in Europe. And because they secured a regulatory license early on, they're now a leader in the market. This has allowed them to outpace competitors who are still tangled up in regulatory process. What's really impressive to me is how their ETP business generates a staggering 8 to 10% return on assets under management through management fees, staking, and lending. That's virtually unheard of in the traditional finance industry. And on top of that, their arbitrage trading desk, which they launched just a few months ago, has already brought in $97 million in revenue. DeFi Technologies also owns Reflexivity Research, a profitable crypto research firm founded by Anthony Pompliano, who is also known as Pomp. He's also a shareholder in the company. Pompliano's analysis is worth noting. He believes the stock is wildly undervalued, especially considering the sector it operates in and the products it has in the market. With a P/E, price to earnings ratio, of 3, DeFi Technologies seems like a great investment opportunity, reflecting their strong financial performance and growth potential. So here's the conclusion. DeFi Technologies is at the forefront of financial innovation. When I put it all together, DeFi Technologies, US stock ticker DEFTF, stands out as a trailblazer in the cryptocurrency industry. Their success is driven by visionary leadership, strategic investment, and an innovative business model. Given the current political and economic landscape, I believe this company is well positioned to lead the charge in the ongoing shift towards decentralization. As the industry continues to evolve, I'm confident that DeFi Technologies will continue driving both profitability and innovation in the years to come. There are always risks in investment, and there are no guarantees of any kind. Thanks so much.